Hey guys, welcome back to the next episode of the Nomad podcast. So today's episode we're going to talk about the trading simulators, right? Paper trading, and why I would advocate having some practice get done before we actually use the real capital. Okay, so let's get on with the show. Now, the first point is, what are the trading simulators, right? Or what is paper trading actually referring to? So this may be included in some of our brokerage accounts where they offer this function for us to actually try out using fake money, right, or simulated money first. Okay, so in that case, some of the paper trading accounts actually allow us to set a predetermined amount to start with, right? Let's say in the Singapore context, let's say we are using Weibo. So Weibo actually allows us to set how much we want to start with. So it could be 10,000, 100,000. So from the start, we can actually enter an amount that will replicate what our actual capital will be. So say we are going to start with 10,000, then we can use 10,000 in this account, right? Or if you prefer a larger amount, then we can set it, right? And always there's this option to reset. So it's sort of like a game, right? If you call it that way, that it allows us to test out our strategy first without risking real capital. And if things really get ugly, right? Let's say we have risked a huge portion or it's lost, right? It's actually not real money. Okay, so in that case, we can reset, right? We can restart, and we are able to give it another try, right? Until we are comfortable with it. Okay, so the idea here is to be comfortable trading, right? Since at this stage, we may want to test out certain strategies or to see whether the way we trade will be suitable and to see if we are actually profitable. So in that case, we can actually test out first, right? So that we don't risk anything, right? So that's the first point here, right? What trading simulators are all about. So second point, right, what I want to raise is whether it actually helps. So I'll say first is it actually helps to build the confidence. So when we are training the simulators, of course, it may not exactly replicate our actual performance, right? Because sometimes the trading simulators orders, right, may be filled at a different price than if you were to trade in the real market, right? So for example, let's say both for the bid and ask price, right? Our price may, let's say the price that we enter into, right? Suppose we want to buy a call option, okay? And then in that case, because we want to get the order done, right? We can actually enter to buy at the asking price. So in the normal context, let's say in the actual market, the order will be filled, right, immediately because we choose to buy at a higher price, right? Ask price being the higher price. But with the simulation, it may not get filled immediately because there may not be any actual trades being conducted in the market yet. Okay, so in that case, even if we enter at the ask price, suppose there has been no activity, then we may still not be able to get the trade across. Okay, but the idea is this, we may be able to enter, right, regardless, and we can see how it performs, right? Suppose we use a certain strategy and we see that after, let's say, a few months of trying or a few weeks of trying, that this strategy more or less works in our favor. So we have clearly defined the entry criteria, the exit criteria, and then every time we stick to these criteria, they work for us, right? Whether we are in a winning position or losing position. As you see the portfolio get bigger and bigger, right, you may be more confident to actually start trading with the real cash. Okay, so in that case, it actually helps to give us some starting point, right? So we're not going into the market blindly, just like losing our capital, but actually being able to build some confidence first, knowing what we actually do, and we can actually have higher chance of winning the market, right? So I would say that's important. Now the other thing is, it allows us to know ourselves. So it is one thing to look at the strategy and to say that we will implement this, we will stick to this very closely. However, as humans, we have major emotions running in us. We have the emotions of hope, right? When we enter, we want to have a winning position from winning outcome from here, and fear, right, when it goes against us and we hold on to the position scared that it may just go to zero, right, or hoping that it will actually somehow turn out profitable, it will recover, right? It may or not may not be the case, but emotions by and large will be a big factor, right, that could hinder our trading. So when we trade with a paper account, right, bear in mind that the emotions may not be the same, right, because we do know deep down that this is not real money at stake. So we may tend to be more risk takers, we may not feel that fear when we lose in a certain position because we are not losing anything actually. In that case, it is still useful to know how we react, right? To see whether we have certain feelings and how we actually think, because the thinking process by and large should be roughly the same, similar, right? In terms of how we assess the trade, how we decide whether to stay on or to, let's say, exit a losing position, right? So then, right, if so, we are able to see how we behave, and later on, we are able to remind ourselves, right? At least when we trade with real money. Or let's say in that case, if we find that we are always unable to exit a stop loss, right? We are only going to exit a winning position, right? We close with profit too fast and we don't let the profits run, or we close a losing position too late, right? And we let the losses run, and eventually our losses are bigger than the profits. So if this is often the case when trading with the simulation account, then we need to be aware of this so that this mistake shouldn't be carried forward to your actual cash. Right? So if you find this to be an issue, then you may need to get it sorted out first, right? What is the problem here? Is it that we lack the discipline to stick to the trading plan? Or is it that we have no trading plan in the first place? Or is it that our emotions are too overwhelming that we just lose all of our thoughts, right? We don't know what to do. If that's the case, then we need to pinpoint what's the source of the problem and then solve these issues first before we actually move on to the real cash, right, with the real accounts. So that is something to bear in mind, right? Then in order to get the most out of our simulation accounts, coming on to the third point, I would say that we want to treat this as a real trading, right? So even though it is simulation and we can always reset this, right? We can always retry the whole thing again and again. It doesn't mean that we should treat it lightly, because we want to see how we actually perform in the markets, right? So if you're able to perform well, let's say we can generate 10% return within a month, which is quite impressive, then we want to translate this into the real accounts, right? So if this is something that we can achieve, then what had gone well, or what didn't go so well as to prevent us from getting a higher return, right? So if we are able to again see where we did better at and where we didn't do so well in, then it would be good that we can know this and work on this as soon as possible, and also to set some realistic goals. So it doesn't mean that because it's simulation we can just go all wow, right, and then just anyhow trade. That we are aiming for, let's say, 100% returns every month, right, is probably unrealistic to aim this way, right? So we will probably aim for something that we have achieved before, right, or that we probably can achieve, so that we can actually work towards those. So this is something that we can actually look out for, right, when we're trading with the simulation. All right, the last portion here, right, to talk about some common mistakes. Okay, so first one, again, to look at over trading, right? So over trading, not just the case with the real money, right, or even simulation account, right? It applies for both, but this is a dangerous habit. Over trading could be that within a day, we enter, say, 20, 30 trades. So it is the quantity that counts, but rather the quality of the trades. So if you're able to pinpoint to find those high quality setups, right? So let's say we have a set of criteria to enter, and this fulfills, say, all of them, then it probably will be a high quality setup, right? In terms of the candle formation, in terms of the EMAs and so on. So in that case, we may want to choose these positions to enter into. We could have just entered into 3 trades for the whole session, right? We need not have entered into 20 positions or 20 trades. But these 3 trades could have given us more profits compared to the 20 trades, right, that we could have traded otherwise, right? So it's not how many times we traded, but how much profits, right, the total trades actually give us. So if you're able to select the high quality trades and not the low quality ones, then in that sense, we have avoided over trading, right? So it is also a behavior that we want to pick out from the start, right? So that we can see if this is something that we often do, and we try to avoid this when we are in the real trading with the real cash. Then also to look at our emotions, right? Again, back to emotions, because emotions are always inside of us, right? Something that we feel, and we don't want we don't want to neglect them, right? Nor can we just do without them. So in that case, we need to see the difference between trading the simulation account, right, and the real account, because chances are with simulation account, the feelings or the emotions are more subdued, right? Because it is not so amplified because it's not real money. But with the real cash, we don't want it to amplify as much. Right? We also don't want to be blinded by the emotions such that we just ignore all the rules and we just hold on to a losing trade, or we just cut any winning trade so fast. So the trading accounts should help us in these areas, right, to see where we are doing not so well in and to see where we are doing better in, right, so that we can work on the areas that we are weaker in and really capitalize on the good behaviors so that we continue showing these behaviors, displaying them, and in order to have a winning trades, or in order to build our portfolio as well when we trade with the real cash. Okay, so this is the episode on talking about the trading simulation. I hope you guys have gotten some value out of this, and I will see you guys in the next video.